Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Shutdown doesn't deter market. Well, stocks wobbled a bit at the end of the third quarter, which was likely due to portfolio rebalancing, but it could hardly be called a pullback, and it didn't last but a couple of days. Then by midday October 1st, the S&P was once again making new all-time highs despite a government shutdown, which seemed to be more of a positive catalyst than a reason to be worried. And why wouldn't it be? Every shutdown over the last few decades has been resolved within a couple weeks, and rarely has it resulted in any impact on the economy and/or the broader markets. Now, for the time being, the story remains pretty much the same. Earnings revisions are improving, money supply is growing thanks to the Fed, and investors are feeling the FOMO. That's fear of missing out for those of you who haven't heard the FOMO acronym before. Now you know. We remain steadfastly on watch, though, for signs something could be changing, but for now anyway, the trend is still your friend. For this week's featured insight, don't chase yield. There are no free lunches when it comes to investing. I promise you. If something seems too good to be true, it most definitely is. Now, that doesn't mean you can't earn a huge return on a good trade or get lucky from time to time. It just means there's no holy grail or shortcut to riches that can be consistently exploited over the long run. One of these free lunches many investors think that they can get is by selecting investments with a high yield. That is something that pays a large dividend or interest payment relative to its price. Higher yield comes with higher risk. On the stock side, it could come in the form of a dividend cut or declining stock price that wipes out the benefit of the dividend yield. On the bond side, it could ultimately come in the form of a default, which in some cases, you get some or not any of your principal investment back. Looking ahead, the calm before the storm. Earnings season won't begin until mid-October, and there really aren't many economic reports expected out over the next week or so. And if the government stays closed, many of the scheduled economic reports won't even get released. Therefore, investors will likely continue to push prices in the direction they've been heading, which is, in the case of the stock market, likely higher. Nevertheless, these environments do leave the market vulnerable to unexpected shocks. So if anything happens that we're not expecting, it could easily result in some market volatility. And whether that happens sooner or later, volatility will return to markets at some point. And with stocks trading at nosebleed valuations currently, it could ultimately be a bit of a bumpy ride. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.